Hi, and welcome to another episode of Innovation Live. And I think, Laura, we've got it going. It's a
Yeah,
yes. So if we do break up on this, just and you're watching on LinkedIn, just go back, refresh, and we'll hopefully stay connected this time. But Laura, we've got some real special guests today. So tell us, why don't you just set up our guests and what our discussion is going to be about today? We have some really good news for people listening.
absolutely. So we have Aurora Voss of ClaimSpace, and we have Doug Roth of CT Innovations joining us today to talk about the venture investment equation.
Well, thank you. And Doug, thanks for popping in from CT Innovations. I think we'll come back to you in just a second. But Aurora, it's great to see you. First of all, can you tell people who are you and where are you today?
Sure. Thank you for having me, everyone. It's really lovely to see you all again. I'm calling in from Sydney, Australia, and my name is Aurora Voss. I'm the co-founder and CEO of ClaimSpace. So we are originally an Australian founded, now a US entity, which sounds really fancy now that I say that. And we're an early stage SaaS startup. We have a platform that helps insurers and financial services organizations to improve collaborative processes such as claims, complaints, and others. Yeah.
And I'm just going to throw up your website for people who are kind of interested in just to dive a little bit more into it. So claims may be different, revolutionizing the claims experience, and I'm just popping up kind of the value proposition. Why does your team need claim space? Why does your company need it? What do your customers need? Why does the industry need it? Maybe you could just take a minute about talk about the problem you're solving for whom and exactly why would I, if I'm an insurance carrier, why do I care? What are you doing for me?
For sure. So look, in insurance, to kind of it's always traditionally been about sales and distribution, right? You follow the money and you follow where your revenue and profit comes from. And that's what we've seen in the last kind of 5 or 10 years. Most of the technology in insurance has been invested into sales and distribution. But, fortunately or unfortunately, claims are having a real moment at the moment with the kind of global pandemic and the climate as it is. And we are starting to see more of a realization that claims is a really important part of the insurance value chain. It's really where a promise is delivered on, but it's also where a lot of really rich interaction happens between an insurer and their customer. The problem though is that a lot of our competitive landscape, so other companies that deal with claims, they tend to use really, cutting edge technology like AI and blockchain and, a lot of really exciting things. The problem for most of the insurance industry is that, small to mid-sized insurers, they just don't have a digital foundation that can support those kinds of technologies and really see them scale. So most insurers, when they come to us, they've already tried things like chatbots and, AI solutions to detect fraud. But they haven't been able to roll it out because they're still using Excel to manage most of their processes. And so what ClaimSpace does is we enable a lot of insurers who might be sort of small or mid-sized or may not have, like a really developed app or portal for customers. We enable them to create really, really beautiful digital experiences, not just for their customers, but for everyone involved in the claim. And we help to centralize all of that disparate data so that not only customers have a great experience, but claims handlers and internal stakeholders also have a great sort of centralized digital experience. And of course, one of the big value propositions now is that we enable insurance teams to work from home because we are a cloud solution. So I can talk more about that a bit later.
Oh yeah, no. Well, and I'll say what's probably most remarkable. First of all, the Hartford connection. So just to kind of for people who aren't familiar, you were participated in actually not the last cohort, correct? of claims of Startup Bootcamp, right? Joined our program, and were exceptionally persistent in kind of a crazy time. And so tell us, in the midst of, massive pandemic, you have some really, good fundraising news to share. And can you tell people exactly, what's happened? And next question is, how did you do this?
Funnily enough, with Excel. So for a bit of background as to our Hartford connection. So this, we're in April of 2020. I first heard of this opportunity in Hartford back at the end of 2018. And at that point, we were still in Australia. We had a couple of global customers, but we were really starting to focus on the US as an opportunity. And I always say this, that, in insurance, Hartford is like Hollywood. It's like the place to be, right? And so when this opportunity came up, we did not think twice. My co-founder and I literally jumped on a plane thinking that we might be in Connecticut for, maybe 3 weeks, just to kind of see how the program was. And then I ended up staying in the US for most of 2019. And it just one opportunity led to another. We met Paul. After we'd taken part in Startup Bootcamp, we also became an alumni of the Nassau Re program. And we just kept on saying yes to every single opportunity that we found over in the US. And the experience in Hartford actually ended up leading us to Silicon Valley to a plug and play program. It led us on to Minneapolis, where we took part in the on-ramp insurance program. So Hartford has really been an unbelievable tool for us, and an incredible experience of just connecting us across really the rest of the US insurance market. It's acted as a real kind of launch pad for us there. Now, just, before I started raising this seed round, I used to work in venture capital before, very early stage venture capital. And I had all of these sort of preconceived ideas of how I should raise a round of capital. You always hear things like, okay, don't let it go on for longer than 3 months. And, once you get a term sheet, close out the rest of it in like 30 to 60 days, and that's what I thought. I have just made the first round of the first close of my seed round, and I've been raising for over a year. So, that's the first thing to kind of just get out there, is that it's such a journey and such a individual process, depending on the founders, depending on the market, depending on who your lead investor is and the terms of your round. So we actually were incredibly fortunate that through the Hartford bootcamp experience, we were introduced to the team who would become our lead investor, Counterview Capital. They're an early stage enterprise VC from New York. We met them at a startup bootcamp event, and that was back in April 2019. We didn't really pitch to them, but we just got to know their team, and they offered us our lead term sheet in about August last year. And since then, the only way I can really describe how I got this round together was just like one Excel line at a time. I made a huge list of about 250 investors across the US, and then I just picked them off one by one. I got on, I don't know how many planes, trains, and automobiles across the US in around between sort of August and November of last year. I don't know how I did it. I must have been crazy because I was about 6 or 7 months pregnant at the time. Oh, but wow. My co-founders and I we just did it. We just got on planes and we just knocked on doors and just tried to get to know as many people as possible, really. And that's really how we've done it. We hit a huge roadblock because we were in a great position last year where we had this excellent lead investor and we had a term sheet. But then I had to come back to Australia to have a baby. And that really put a sort of dent on momentum, if you like, because, raising capital in the US from Australia right around Christmas time, everything slowed down. There were probably about 5 or 6 moments where I really thought we were completely going to run out of money and die before we raised. And then obviously coming into January, I thought, yay! I thought, yes, we're going to get momentum again and we're going to close this thing. And then obviously January, then the pandemic hit and I thought, oh my goodness, we're not going to make it. And then funnily enough, our existing customers, we have customers in Canada, in South Africa, in Germany, and in Australia. They all contacted us at the end of January, beginning of February, and said, oh my goodness, thank you, ClaimSpace. You've enabled us to work from home and have zero interruption to our claims operations. And that's when I thought, oh my goodness, this is a crazy silver lining in what is an absolutely atrocious pandemic. And we've just seen an incredible lift in our traction since then. And it's that traction and momentum in our business that has enabled us to finally close the round and garner more interest from investors, So yeah, that's a very long-winded way of saying you just got to hit the list and then one by one.
Interesting. Now, well, and by the way, just so you know, we're having problems with streams. I think Frank may be parked out front of my house on my Wi-Fi, uploading massive quantities of video. So the good news is we got this recorded on Zoom, so we'll actually link this to Vimeo, and for the people who haven't heard, we'll put this up like in the next hour. But that's really a really good story. Doug, let me just sort of kick that over to you. Like, what's your perspective? Now, you're working through an enormous number of startups. How does Aurora's story match with some of the companies in your stable, and what lessons are there to be learned here?
Yeah, no, I think that it's really testament to Aurora, the entrepreneurial team there, and the opportunity that ClaimSpace presents to be able to raise money in this environment is really incredible. It is a difficult environment for sure. And I think just generally outside of a global pandemic, right, I think that generally it is hard to raise money. And I sort of sometimes describe it as it's like trying to do a jigsaw puzzle in the dark. Because so many pieces have to come together at the right time and in the right way for investor and entrepreneur to find that match and to make that investment, and throw in a health crisis, an economic crisis, and all of the uncertainty that's going on, and it just exacerbates all of those issues and all of the sort of that very small chance that the right investor finds the right entrepreneur at the right time to make an investment. So congratulations on raising money, because it's not easy. And to your point, Paul. So yes, we have a big portfolio, and I think for any investor, and that goes from angel and early stage investors to PEs. I think the first responsibility of any investor is to focus on the portfolio. That's where you have a responsibility, is the companies that you've already invested in. And once you've sort of triaged the portfolio and tried to make sense of all of the confusion of, at least here in the States, of sort of March and early April, and what all of this is going to mean and how it's going to impact various companies in your portfolio, I think you can begin to spend a bit more time looking at new investments. And we have, I think that we'll have some announcements over the coming weeks of some new investments, some new companies added to the portfolio. And so I think that there will be new investments. I think definitely things will change, and it will take a while. I think that the process is the example of ClaimSpace taking nearly a year to raise a seed round. I think that I think most early stage companies will see the process of raising money be stretched out. But deals will get done, and then perhaps maybe the other thing that investors and entrepreneurs will also see is perhaps a change in the terms. We probably had been at a period of time when it was very founder friendly in the terms, and some might argue that there was a bit of a bubble, and valuations were getting to some unreasonable levels. And I think we probably should expect that terms are going to shift a bit to be a bit more investor friendly. And it doesn't necessarily mean completely investor friendly, but I think they the pendulum will swing back a little bit across valuations and liquidation preferences and anti-dilution protection and things of that nature.
Now, Doug, you mentioned, investments will still be made throughout the last, X number of weeks that we've been dealing with this pandemic. Do you think that will influence the type of investments that investors are going to be focusing on? So, everything that's cloud-based, it's user experience, health tech, med tech. Do you think that this will impact and shift investment types as well?
Yeah, I think that there's maybe I'll highlight two different changes. One that you've touched on. I think that clearly you need to. So I'll just speak from the perspective of early stage. I mean, early stage investors, you're trying to predict the future, and what is the world going to be like in 5+ years, because that's when the investment I make today will mature and grow and be in a position in terms of scale and product market fit and customers and revenue. It'll be 5 years by the time they're at a position where they're suitable for an exit of some form. And so what does the world look like in 5 years? Who can tell, right? And so when you have a black swan event like coronavirus, I think that that shifts quite significantly what people's perception of the world will look like in 5 years' time. And so I think you're right that how it impacts med tech, how it impacts insurance and how insurance is done, and things like mobile first and cloud based and the digital transformation of a lot of different business models that have yet to fully transition their businesses to a digital native environment, and the different sort of business models that will create. Who would have known the extent and the volume of e-commerce and home delivery? The breadth of products. We never would have expected to get home delivery of eggs, right? And now that's super important to people. And so bring that forward a number of years, and what does that world look like? So I think that's one change. I think the other change is at least in the more immediate future. I think investors are going to be, and we'll say in the next 6 months, I think investors are going to be a lot more tightly focused on their core investment strategy. So, when times are good, I think that you're, as an investor, willing to look at business models and opportunities that are a little bit outside of your wheelhouse. And I think right now, investors are really going to stay true to what I know, what I'm comfortable with. I'm not going to deviate at all in any fashion across any attribute. I'm going to invest in what I know. And so I think those are two sort of significant impacts that we'll probably see in the investment world.
Yeah. So Aurora, question for you. It's interesting. Some of the features, I think, of what your product does was kind of nice to have before the pandemic. Now, while I can communicate with people without actually having to deal with anybody in person, do you think it's going to be easier to convince carriers to look at your solution and look at remote collaboration differently going forward?
Yeah, been really interesting about all of this is it's just highlighted how much more elastic our value proposition actually is, depending on who the insurer is. You know, when we first started ClaimSpace, certainly when we first started sort of entering into the US market and understanding what that means, we were very sort of hardcore on our value proposition being all about customer experience. You know, we were like, don't forget your customers. It's all about that NPS score. And what we've learned over time is that, every insurance company in the world wants to improve their NPS score and wants to do right by their customer, but there can be so many roadblocks to overcome before that. And so what we've noticed, we started noticing a real change in some of the use cases that companies use us for. So we started noticing something really interesting, which was a lot of companies that we pilot with started using ClaimSpace internally for a significant period of time before they actually externalized the tool to customers. And that was really interesting for us because we realized that actually they just need help internally, just to sort out their own kind of digital processes, just to maybe get rid of like 2 or 3 paper forms. We're now having a lot of inquiries from carriers who don't actually, at the moment, they don't really own the relationship with the customer enough to actually adopt a tool for the customer, but they actually need ClaimSpace to collaborate with third-party administrators, which at the moment are sending them updates over email. So the use case for us has just kind of been really interesting, and it definitely depends on the size of insurer, the kind of insurance claim that they're managing. But I think that overall that long-term value proposition is still there, which is I really want to do right by my customer and I want to give access. I want to make the process as transparent as possible. But I think what we're really excited about is now the value proposition is really about helping insurers to build those digital foundations in their operations, which they just previously has either been out of reach cost-wise or just there has been a level of apathy around continuing to use things like Excel or really outdated systems. Whereas now, as Doug said, the pandemic has just sort of accelerated that digital transformation for so many companies. And again, digital transformation means something different, I've learned. In the US insurance market, something different for every company.
Well, just sort of a funny note. So we're, and Aurora, I think you're participating in our Solve-a-thon, correct? I think we've got you part of that. Yeah. So it'll be interesting. So Doug, we asked companies for your people in our company for problems, and literally one of the problems came back was Excel version control. We need help with that. So anyway, it's listen, Laura, what other questions should we ask? We're at sort of the top of the half hour here.
Yeah, no, it's, I think it's interesting. So Doug, you already touched on this to a degree, but let's pretend you had this CT Innovations crystal ball in front of you. And because people can't even think 5 weeks out, let alone 5 years out, 5 days is kind of scary at this point in time. So if you were to look into that cloudy little crystal ball and predict something like a shocking wow, like the fact that, oil prices, look what's going on in that market. Nobody would have guessed. We have, airlines selling off over $1 billion worth of their stock. Who would have guessed? So what is a prediction you have where you can look back and be like, who the heck would have guessed that would have come true from an investment standpoint?
Yeah, I think that, it's obviously a hard question to answer, but I think that there are some industries for sure that will see some significant impact as a result of what we're all experiencing, over these sort of long weeks. And one is say education, right? I mean, we're all sort of at home, and those with school age kids are seeing firsthand what gets the content and the delivery of education. And I think that as schools, for example, and this is just an example, I think insurance has something very similar, and other industries, but I'll use education as an example. because we're forced to adapt to this kind of really strange environment, and forced to experiment and forced to use technology that was it was a nice to have, but now it's a need to have, and the ability, the being forced like this, I mean, to have a Zoom call to communicate. I think that what we'll see is people will get ideas about things that worked and better and things that absolutely didn't work better, and it will accelerate the adoption and the innovation of certain practices. And when we look back 5 years and see sort of how, whether it's K through 12 or higher ed, is being delivered at that point, I think we'll be able to look back to today and say, this was the impetus. This was the genesis and the beginning of that transition. I can't tell what it will look like in 5 years, but I'm pretty sure that what we're going through in early 2020, Q1, Q2 of 2020, will be the point in time where a lot of things changed.
Yeah. All right. Well, thank you, Aurora. Look forward to your participation in our Solvathon. And, congratulations on your fundraise. Doug, as usual, thanks for all the support you've given us. Laura.
My pleasure. Thanks for having me.
The technology is all there. I mean, you'll see. It's a beautiful setup. I'll take a picture of this. It's like, what could go wrong? It's all right. And then one of my colleagues...
I think this is an opportunity for us to create a piece of technology that solves all of these technological issues.
So I'm thinking, what?
I'm not saying this is the cause, Paul, but everything was going smoothly until I saw your Roomba drive by on the floor behind you. So I'm just...
That Roomba doesn't take Wi-Fi, but Frank sitting out on my porch uploading video does. So anyway, all right. Listen, we will we'll close this thing off. Aurora, thanks for coming here. I'll run the close, and then we'll post up on LinkedIn so people can watch this really soon afterwards. So hey, thanks so much, Aurora, Doug, Laura. Thanks.
Thank you, everyone.
Thank you.
Love to see you all.
Yeah.
Bye.
Stay safe.